Hello, Mavericks. How's it going? This is Rob Reinhold. It is May 19th, and I got to say that today's market performance made neither the Bulls nor the Bears all that happy. At one point of the day, we were up nicely. At one point of the day, we were down nicely. And at the end, it really kind of closed in the middle to the lower part. And so this is after a brutal day yesterday. A day where the NASDAQ went down 4.5%, S&P down 3.5%. The fact that there was no bounce back is an ominous sign. We had Cisco miss earnings badly, and this is after Target missed earnings badly. We're starting to get lots of outlooks from companies that say things are a lot worse than the market thought. This is why we're seeing this downward pressure. If we do take a look at the advanced decline line, it was actually positive today. So this is one of the things you want to take a look for when you're looking for market bottoms. As the market goes lower, do you have some stocks bottoming out? And this is something I'm going to be talking about this weekend in our trading room, is that when bad news stops making stocks crash and they just shrug it off, that's typically when you see bottoms. We haven't seen it yet. We're still seeing things get sold off. And then we did get the Philly Fed Manufacturing Index coming at 2.6. It was supposed to come in at 16. These are regional manufacturing numbers, and they are the leading indicators of where the economy is going. And this just was not a good number. So if we take a look at the S&P chart, if we go down to this candle, as I said earlier, it was a green candle. So the bulls say, oh, that's great, but look how far off it closed off of its high. We were positive one point, and then we went through break even, and we closed down. Now, at one point, it was really ugly, and you had to say, wow, look, are we going to break through that last support? As I said, it's a candle that neither the bulls or bears are happy, but I've got to say, if you're on the bearish side, which we are, it looks better for anyone who is bearish here. The Qs didn't even put in a green candle, basically a flat candle. So after a 4.5% decrease yesterday, it couldn't put anything together. Look, at one point, the NASDAQ was up like 1.3%, and it faded and gave it all back. That is just bearish price action. So if we take a look at the heat map, here we can see there was some buying pockets here. Now, one thing I did want to point out was that the big stocks are getting taken out and getting shot. And these have been the last ones to go. So again, Apple, Microsoft, they've started breaking down just a week or two ago after holding up pretty nicely. Consumer, again, Walmart, Procter & Gamble, Coke, Philip Morris, they're getting taken out and shot. However, there's these little clusters here and there where we're starting to see some buying. Look, it's way too early to start cheering about it if you're a bull, because the charts and the technicals look terrible. But this is definitely not saying, okay, we are just in free fall. There are some buyers out there. So let's take a look at where we are in the market this week. So we are below the 20-day moving average is sloping lower. The 50-day moving average is sloping lower. And the 20 and the 50 slope is moving lower. So we've been at a -3 for the past month and a half. That's just technically where the market's said to be, which is be the most bearish you allow yourself to be in your trading system. This week, we said we think we get a bounce. And I got to say, for the first 2 days, we looked pretty dang smart. We did. It was very impressive. The first 2 days, we're like, oh, yep, here we go. Yesterday was ugly. Today's candle, not any better. So we thought we were going to have a pretty decent bounce. And I actually thought that we were going to rally all the way up to about 4170 here on the S&P. You can see we did not get there. We did not get there, and we've turned down. So this +2, it has to be downgraded. Just technically speaking, even if the market were to have an up candle tomorrow, it's not going to bring it up above Friday's close. That is just a mile away here. So you've got to say, okay, this market is way more bearish, and that bounce, again, we said, hey, there's a good chance we get we call it a tradable bounce that lasts 1-2 weeks. We were wrong. It lasted 2 days. And here it is right back down here. So we have to make adjustments, say, okay, Now remember, we just simply paired off our bearishness. We did not go bullish off of this bounce. I was hoping to get more of a run in the S&P to then get more short, and it just didn't make it up to my targets where I was going to take some more short. So now I'm looking at the chart saying, okay, well, I've got to make some adjustments. I need to get a little bit more short than I am. Let me go find some potential trades to get short. So let's take a look at just a few. I do have a long and a sideways for you, but I am definitely going to be focusing on the bear side. It was difficult to find bullish trades. There's just not a lot out there right now. It was fairly easy to find some neutral trades, and I just stopped looking after a while for bearish trades because they seemed to be everywhere. Now, just real quickly here, I want to go over the scan I ran to find my bears. What I ran is I ran a scan that says, give me the stocks that have been the weakest over the last month, but the strongest over the last week. So what I'm looking for is I'm looking for the stocks that were the weakest that had the biggest bounces. I want to sell into those positions. Those are the ones I'm looking to go after. But first, let's take a look at a bull AT&T. And look, I wish I could give you something more exciting. The problem is, at Maverick, we trade the market in front of us, and there's not a lot exciting that's bullish. So this is just a boring trade. As you can see here, 50-cent scaling here. 50-cent scaling. And we've got some pretty serious resistance up here at 20.75. So really, I'm looking at a 20-50 bull call spread. You're probably going to pay about 23 cents for that. You got 27 cents of upside. It's not real sexy. I get it. If you say, Rob, I'd rather be diagonalized, then I love that. I would look at a 19 for a couple weeks out and sell this week's 20.50. 20.50 is the most you can really hope for this thing to get. So as far as on the bullish side, this is as mildly bullish as you could possibly get. I just don't see a lot out there to chase. On the sideways, this is Sabra Holdings. This is a big healthcare company. Now, this company has about a 10 or 11% dividend at these levels. And the dividend is definitely shown that it has some really hardcore support right under 12. It's been under 12 a few times in the past year or two, and every time it's bounced right back up. So we've got this floor down here at 12. And really, we could even take a look at 12.50 as a shorter term floor based on the time frame of your trade. We've got some resistance up here at 14.50. So for me, the big question is, okay, where do I want my midpoint to be? Do I want my midpoint to be 13.50? Do I want it to be 13? I'm going to go with the 13. So I'm looking at a 12, 13, 14 butterfly. And for this, and for next week. That's what I'm looking for on this one on the sideways. The bears, as I said, I'm going after the things that had the biggest bounces that have been the weakest. And here's Adobe. So Adobe reached 370. It rallied all the way up to 415. We're still 25 points above this high. If the NASDAQ goes down and breaks through support, which is very likely in the next week or so, this one was likely to go down and break through support as well at 370. That's 25 points. So you can do a whole number of things. You can do like a 380, 380, 400 bear call spread. And you can do that one for fairly short term, either next Friday or the Friday after. You can just take a look at long puts. Again, volatility came in a little bit today, so it's going to make the puts a little bit cheaper than they were yesterday. You can definitely take a look at long puts, or again, any combinations of spreads will work on this one. So that's going to be in large cap tech. Next, the group that actually had the largest bounce off of this bottom were the electric car vehicles. Now look, they've been the worst. They've been very weak. And so here's NIO has bounced from 20 to 30. Again, on percentage basis, this is a big run. Now, yes, it fell from 55 down to 20. That's just getting killed. I mean, that is 60% loss in a month and a half. So look, it was oversold. We get it. It bounces up 50%, but it's bouncing up right into a resistance area. This is not ready to sell yet. So it is not triggered. We need to get a reversal candle and a confirmation. Once we get that, then it's ready to go. but this one's on my radar. This one, Rivian, along with Neo and XPEV, these are on the radar as things to short when they top out. And here's AZEK. This is a building company. Really same thing, one of the weaker stocks out there. We rallied up and just could not put in any sort of higher high here. And it's just been trading in this area. So it's just a matter of time. When is it going to break down? 16 would be the target. If you don't want to be that aggressive, do like a 17-19 bear call spread. That would be a fairly conservative trade. Yes, you're going after a little bit of delta, but not all that much. So let's talk about tomorrow. Today's candle was disappointing, and I actually told myself, because like I said, I thought that bounce was going to carry a little bit further and a little bit longer. So like I said, I pared back all my bears the week before, took profits on them, and I was hoping to get a nice big bounce, maybe over 2 weeks, to then go back and go heavily on the short side. We got two and a half days, and then we got yesterday's really ugly candle. And then I said, okay, look, if this can bounce back after that ugly candle, I still think there is some more upside potential in this market. And we saw that candle, and it did not hold. It did not hold. So that's likely all we got off the rally. Unless we get some news that changes everything around, that's likely it for the rally. And we got to start looking at getting more back on the short side as we've taken a lot of our short exposure off. No economic reports coming up tomorrow. And earnings reports, we've got Neo, which is one of the shorts I am looking at, and Foot Locker and Deere. Now, we had some earnings after the bell. Palo Alto Networks, PANW, was up sharply after earnings. So they are going to be trading higher. Obviously, they had good news. However, here's the problem. It didn't really move the futures because some other stocks like Applied Materials trading down 5 or 6%, Ross Stores trading down 17%. We have more bad news after hours than good news. So it's telling me probably going to have some pressure. And on a Friday, markets rarely bottom on Fridays. Friday is very likely to be another down day, which leads to a Monday gap down or some early selling next week. So I do think new lows are likely. I thought there was going to be a bigger bounce than it was. That's all there is. So now we got to get back into, okay, we got to put on some exposure for this next leg down. Thank you for joining me. Everyone take care.